Hello guys, this is Dr. Sajadwani. The topic of today's video is deduction of TDS by the DDOs and its deposition under the GST. As you will be aware that the GST Act came into effect in 2017 and it was subsequently applied on the state of Jammu and Kashmir in 2017 itself. But Section 51 of the GST Act of the state of Jammu and Kashmir and the GST Act of India, it came into effect on 1st October 2018. So I have made this video for guiding the DDOs, in fact easing the deduction and deposition of TDS by the DDOs. So let's start. Section 51 of the Jammu and Kashmir Goods and Services Tax Act 2017. That means I will deal wholly and solely with Section 51 of the J&K GST Act of 2017. As you must be knowing that the GST Act came into effect in 2017 itself in the whole of India, and it was subsequently applied to the state of Jammu and Kashmir. So under Section 51, there are certain terms you must first understand, you must know. That is tax deductor. Who is called a tax deductor? Under Section 51 of J&K Goods and Services Tax Act of 2017, the deductor of tax may be any department or establishment of the central government or the state government. आपको याद रखना है, right? It may be a local authority, or it may be a governmental agency, or it may be an authority or a board or any body set up by the Act of Parliament or state legislature, or established by the government with 51% or more participation by way of equity or control. Or it may be a society established by the central government or the state government or the local authority under the Societies Registration Act of 1998, or it can be a public sector undertaking. So a tax deductor, it may be any department or establishment under the central government or the state government, or it can be any local authority, or it may be any governmental agency, or it may be an authority or a board or any other body set up by the Act of the Parliament or state legislature or established by the government with 51% of equity or control. Or it may be a society established under the Societies Registration Act, or it may be a public sector undertaking, right? So DDOs, they work as tax deductors because they act on behalf of a tax deductor. They act or they deduct the tax on behalf of all those bodies which are defined as the tax deductors under the GST Act. So after that, you must know the conditions for deduction. When is a DDO supposed to deduct GST? When the total value of taxable supply is more than 2.5 lakh rupees under a single contract. ये आपको याद रखना है. That means the first condition for the deduction of GST by the DDOs is that the total value of the taxable supply is more than 2.5 lakh rupees under a single contract, right? And in case of a contract which is made for both taxable and non-taxable or exempted supply, in those cases, what the DDO will see that he will make the deduction only if the total value of the taxable supply is more than 2.5 lakh rupees. So it is easy to understand. And when the location of the supplier and the place of supply, supplier's location and the place of supply are in the same state. Say I'm talking about J&K if the supplier he is registered with GST in the state of Jammu and Kashmir and he is supplying the goods or services in the Jammu and Kashmir itself, then we will deduct 1% of CGST and 1% of SGST, that is total 2% of GST from his bills, right? So if the supplier who is registered in a state supplies the items of goods or services in the same state, then we will deduct 1% plus 1% of the CGST and SGST respectively. And if there is a second condition, if the supplier is registered in one state and is supplying in another state, in that case you will deduct 2% of IGST, right? Interstate GST. So in both cases you will deduct 2% of GST. Say if the supplier is registered in Jammu and Kashmir and he is supplying in other state, say Tamil Nadu, in this case you will deduct 2% of IGST, or vice versa. If the supplier he is registered in Tamil Nadu and he is making supplies in J&K, in this case also you will deduct 2% of IGST, right? So you have to deduct 2% of GST in both the cases. So these are the conditions for the deduction of GST. So the first condition is that the total value of the contract is more than 2.5 lakh for items which are taxable. Number two, if the contract is for both the taxable and exempted items, you have to deduct a GST only when the value of the taxable items is more than 2.5 lakh rupees, and you will deduct a GST only when the supplier and the place of supply is in the same state as the DDO, right? You will deduct 1% plus 1% of GST. And if the supplier is registered in J&K and the place of supply is outside J&K and the DDO is himself in J&K, in this case you will deduct 2% of IGST. And if the supplier is registered in Tamil Nadu and he or in any other state and he is supplying the items in J&K and the DDO is himself in J&K, registered in J&K, in this case he will deduct 2% of GST. What is the amount of deduction? You know that you will deduct 1% plus 1% of CGST or SGST, or sometimes you will deduct 2% of GST, 2% of IGST. So there are certain cases where the tax deduction is not required. This is very important. Common sense, when the total value of a single contract is less than 2.5 lakh rupees, less than or equal to 2.5 lakh rupees, so at that time you will not deduct the GST, right? When the total contract is more than 2.5 lakh rupees but the amount of taxable items is less than 2.5 lakh rupees, in this case also you will not deduct the GST, and GST is not leviable on certain goods like petrol, diesel, petroleum, crude, natural gas, aviation turbine fuel ETF जिसको कहते हैं, and alcohol for human consumption. And you must also know that when the location of the supplier and the place of supply, location of supplier and place of supply is in a state which is different from the state where the deductor is registered. Say the deductor is registered in the J&K state as a DDO. I got one such bill. I am registered in J&K state and I got a bill where the supplier was from Chennai and he was registered in Chennai and he was supplying in, say, Maharashtra, and he was supplying in Chennai as well. So in this case I did not deduct any GST, so you will also not deduct any GST in this case because the supplier and the place of supply is different from the state where the DDO is registered, right? So The payments made to an unregistered supplier, in those cases also tax deduction is also not required. And sometimes there is confusion whether we will deduct GST from a supplier or not. In that case, you can also take an undertaking from the supplier that his annual turnover is less than 20 lakh rupees in case of J&K. So we will move section 51 of the J&K Goods and Services Tax Act 2017. The deduction of tax by the government agencies. I have told you the government agencies or the deductor, इसमें क्या क्या आता है वो मैंने आपको ऑलरेडी बता दिया है. From the payments made or credited to the supplier, which is known as the deductee. So the DDO is the deductor, and the contractor or any firm or any supplier, he is known as the deductee of the taxable goods which are taxed under GST, or services, because GST is for both goods and services, or the total value of such supply under a single contract is 2.5 lakh rupees. I have already told you. The amount deducted as tax shall be paid to the government. First, you are a DDO. As DDO, you are deducting, say 2% of GST from a bill. You deducted it. This money is lying with you now. So after you deduct, you will pay this money to the government. You will pay this money to the government within 10 days after the end of the month in which the deduction was made. So if you are deducting the amount from a bill on, say, 3rd August, you have to pay this amount of GST to the government by or before 10th of September. That means August is the month of deduction within 10 days after the end of August. That is 10th of September in this case. And while you pay this amount to the government, you have to submit the GST returns in form GSTR 7. You must remember this. So you will pay the amount of GST deducted from the bills to the government, and simultaneously you will return the GST, you will fill the returns, you will file the returns in the form of GSTR 7, giving the details of the deductions and the deductees, right? So the deductor, that is the DDO here, he will have to issue a certificate. He will issue a certificate to the deductee. So as a DDO, I have to issue a certificate to the contractors and the suppliers who supply the goods and services. And I have to mention in this certificate the value of the contract, the rate of deduction, the amount deducted, and other details which are relevant. So after I deduct the GST, I will, after the deductors deducts the amount of tax from the payments made to the supplier, and he will deposit the tax amount to the government, as I told you. But what is the mode of paying this amount to the government? What is the mode of paying the deducted tax amount to the government? Through NEFT to RBI or through a check, which is to be deposited in an authorized bank, which are 25 in number, using a challan on the common portal. I will tell you about these things in detail later on. So while as a DDO you deducted the GST amount and then you pay this amount to the government, you will pay it through NEFT to RBI or directly through a check to any authorized bank. And simultaneously you will file the returns, GST returns, in form GSTR 7 on the common portal, the GST portal, for every month in which the deduction has been made. So for all the deductions in a month, you will file the GSTR returns in GSTR form 7. So all the DDOs of the governments, whether the central government or state government, who are performing the role as a deductor, who are entrusted the role of a director. The DDOs themselves, they must register with the common portal and they must get their GST, which is known as the GST identification number. So each DDO, you must remember this. So each DDO, he must have a GST. He must have a GST as a deductor. So some DDOs, they may also get a GST as a deductee, because in some cases, like me, in my case, I am a DDO who deducts GST from the bills, and I have also I am also getting some revenue as rents and outsourcing. For that, I have to register as a deductee and I have to get a GST number as a deductee. For the timing, we will talk only about the DDOs who will get a GST as a deductor, right? As a deductor. We'll move forward the subject section, that is the section 51, which provides for the tax deduction at source by the DDOs and was not notified. Where the GST Act came into effect on 8th July 2017 in the state of Jammu and Kashmir, but section 51 did not come in effect at that time. And this section 51, it was recently notified by the government that the provisions of the section 51, they shall come into effect from 1st October 2018, and it was notified by the state government through SRO 433 dated 26th September 2018. You can remember this date and this SRO. So for the payment process of the tax deduction at source TDS under the GST, the DDOs have two options. Option 1, that is, for each bill there is a generation of challan for every payment made during the month. That means the DDO, he generates a challan for every bill. One bill, one challan, right? For every bill, the DDO will generate a challan. But this option, it is good for those DDOs who don't make bulk payments. But usually the DDOs in J&K, like me and other DDOs, they make bulk payments, and for them the option 2 is better, because option 2, it includes the bunching of TDS deducted from the bills on weekly, monthly or any periodic manner. So the DDO, he deducts the TDS from bills, but he doesn't generate challan for all the bills. He will deduct TDS from so many bills and then he will pass the bill for all the deductions and then generate a single challan for all. So we will go for option 2 only. I will deal with option 2 only in this video. So option 2 means bunching of deductions and it is deposited by the DDO. The DDOs who make large number of payments in a month, the DDOs will have to deduct a TDS from each bill. They will deduct TDS from each bill for keeping it under the suspense head. So let's consider that the DDO has 6 number of bills. He will deduct a TDS, say, at the rate of 2%, 2%, 2%, 2%, 2%, and 2%. And the amount deducted, he will generate a single challan for the whole amount. For the time being, he will keep this amount in the suspense head, right? And after this, he will deposit the bunched amount from the suspense head on weekly, monthly or periodic basis, and he will pay this to the government through whatever the mode is. So in this case, in option 2, the DDOs who are making large number of payments, they will deduct the TDS from the bills and they will keep the TDS in the suspense head, and later on they will bunch this amount together and then they will take this out from the suspense head and deposit it with the government on weekly, monthly or other periodic basis. So the process followed by the DDOs under option 2 is that the DDOs, they will first prepare the bill. So you all know that the bills are prepared on the basis of a sanction which is known as the expenditure sanction, but now all the DDOs, they should get an expenditure sanction. And this sanction, it must include the total amount of the bill, sanction for the total amount, and it must include the net amount payable to the contractor or supplier or vendor, and it must include the amount of 2% TDS of GST. Say a bill for 100 rupees. To prepare this bill, you should get an expenditure sanction from the competent authority. The expenditure sanction, it must include, like it should read like this: sanction is hereby accorded for incurring the expenditure of, say, the total expenditure of rupees 100, while the net expenditure is, or the net amount payable is 98 rupees, and the 2% TDS is 2 rupees. So this is the expenditure sanction, and you will get, the DDOs will get the expenditure sanction from the competent authority, and this sanction, it must include the total amount, the net amount, and the 2% of amount of TDS. And on this basis, the DDO will prepare a bill, and the DDO will prepare on a bill on the public financial management system in case of the central government, you know that, or similar payment portals in case of other governments working in the center and the state governments. But in case of state of Jammu and Kashmir, we had that PO system, and it is not operational in all the departments in J&K government. So for the time being, we don't prepare and upload the bills on any of the portals, and so we have the direct dealing with the payment authorities, that is our treasury system. So in our cases, the DDO, he will prepare the bill, and since we don't upload neither on PFMS nor on any other portals, we will present the bill to the treasury, and in the bill we will specify the net amount payable to the contractor and the 2% of amount as TDS. And this TDS amount so deducted, it should be booked in the suspense head 8658. It is the suspense head for the timing. So the TDS amount shall be mentioned in the bill for booking in the suspense head. There may be some other procedures, but this is as the guidelines, as the circulars from the finance department, as well as the circulars from the sales tax department in J&K, provide that the DDOs, they have to deduct the amount of 2% of TDS, and they have to book it under the suspense head. But there is another practice that the DDOs, they keep this amount in their budget itself. That means they only make payments to the tune of the net amount, and they don't actually take the GST amount out of their budget. So the DDOs keep the amount within their budgets, right? That means that 2% of GST, that is only mentioned in the bill, and it is actually not drawn from the treasuries to be booked in the suspense head. So next we will go by the book. The DDO, he will be required to maintain a record of the TDS. Obviously the DDO is making deductions from a number of books, so he must keep a record of the TDS that is being booked under the suspense head, so that at the time of preparing of the CPIN for making the payments on the weekly, monthly, or any other periodic basis, the total amount. The CPIN means the common portal identification number. The common portal identification number, it is issued at the time of generating the GST tax challan. When you generate the GST tax challan online, you get the CPIN. When the DDO needs to deposit a TDS amount, what he will do, he will prepare the CPIN, that is common portal identification number, on the GST portal for the amount that has already been booked under the suspense head. You got it? So you are deducting the TDS from a number of bills. The TDS amount, you are keeping it in the suspense head, and from the suspense head you want to deposit this in with the government. You will do one thing: you will generate the GST challan online. You will have the CPIN number, for the amount already kept under the suspense head. While generating the CPIN, while generating the common portal identification number, the DDO will have to select the mode for the payment. And at the time of generating the CPIN number, you will have to select the mode of payment, whether you want to do the NEFT or RTGS, or you want to have the over the counter mode. So in case of OTC mode, the DDO will have to select the bank where the payment will be deposited. So in case of OTC or the counter mode, the DDO, he will have to select the bank where he wants to make the payment. It will be clear later on that DDOs shall prepare the bill for the bunched TDS amount for the payment to the concerned payment authority. So the DDO, he will prepare one bill, वो एक bill बनाएगा जो भी इसने TDS amount direct किया from all the bills in a week or a month. He will bunch that together in a bill and he will present the bill to the payment authority, that is the treasury, for payment. And the treasury will pass the bill like other bills. And in the bill, the DDO will give a reference of all the earlier paid bills with 2% of TDS deducted, because this is a bill, is a single bill for whole amount of TDS deducted from various bills, and the amount that had already been kept in the suspense head. And the DDO may also attach a certified copy of the records maintained by him. So the DDO will prepare a bill of the bunched TDS which he deducted from a number of bills, and he will present the bill to the payment authority, that is the treasury, and the payment authority, it will pass the bill like other bills, and simultaneously while it passes the bill, it will clear the suspense head, because the TDS amount that was deducted from all the bills, it was kept in the suspense head. Now the treasury officer, he will pass the bill. Passing the bill means drawing money. So this money, it will be drawn out of this suspense head, and now it will go to the government. How? In case of NEFT or RTGS mode, the DDO, he will mention the CPIN number, because the DDO, he has uploaded the GST online, so he will mention the CPIN number. In case of CPIN number, he will use the beneficiary's account number, and in case of beneficiary, he will use RBI, and he will use IFSC code of RBI, and he will request the payment authority, that is the treasury officer, to make payment in favor of RBI with the credentials. The treasury through J&K Bank, the DDO will present the bill to the treasury, and as we give the advice or sometimes we endorse the bill to the third party, same procedure will be kept here. Here we will use a CPIN number, we will use the name of beneficiary as RBI, and we will use the IFSC code of RBI, we will use the bank details of RBI, and we will request the payment authority, that is the treasury and the J&K Bank, to transfer this amount to RBI. Simple. And in the OTC mode, the DDO, OTC mode is nothing but the giving of a check, A category government check. The DDO, he will issue a government check in favor of one of the 25 authorized banks. The DDO will issue a check in favor of an authorized bank, and the check is deposited along with the CP number with any branch of the authorized bank so selected by the DDO. And when the payment is successful, the CIN will be generated by the RBI or the authorized bank and will be shared. Upon the successful payment, a challan identification number will be generated by the RBI or the authorized bank, and it will be shared electronically with the GSTN portal, and it will be credited in the electronic cash ledger. The DDO has an electronic cash ledger in the GSTN portal, and in that electronic cash ledger, the amount is credited. That means that each DDO, he has an electronic cash ledger. The DDO on the portal, GST portal, he has an electronic cash ledger. The amount deducted by the DDO as GST, which was uploaded on the portal, and a CPIN number was generated, and the amount was paid to RBI directly through NEFT or to an authorized bank, which directly goes to RBI. And after successful payment, there is a challan identification number which is generated, and this challan identification number, it will be shared with GSTN portal, and the amount will be credited to the electronic cash ledger of the DDO. So DDO को समझ आ जाएगा कि the amount he actually deducted from the bills, it is credited to his electronic cash ledger, and this, it can be viewed by the DDO, and the details of the challan identification number, they can be noted by the DDO anytime on the portal using his login credentials. The DDO should maintain a register to keep a record. DDO को track रखना है. He has to maintain a register to keep a record of all the TDS deductions made by him, and he will record this, and this will be helpful when he files the return in GSTR 7 form. And the DDO, he can also make use of the offline utility on the GSTN portal. And the DDO, he shall file the returns in form GSTR 7 by the 10th of the following month. I have made this clear already. And the DDO should also generate a TDS certificate through the portal in the form GSTR 7A. So there is a generation of TDS certificate on the portal in the form of GSTR 7A. So this is all about the deduction of GST by the DDOs. So in short, in this video, what I told you is that the DDO, he is a deductor, and he will exercise option 1 or 2 for deduction. And in this video, we concentrated on the option 2, which is the most common option. In option 2, what the DDO does, he takes all the bills of a month, of a week, or of a period, and he deducts 2% of TDS wherever applicable in the form of GST, which is the GST amount, and the sum of all these deductions, he takes this whole sum in the form of a bill presented after a period. This bill is presented to the Treasury or the payment authority, and the DDO records this amount to the suspense head for the time being, and the Treasury passes the bill, and this suspense account, it gets cleared. The amount, it is paid to RBI or an authorized bank through NEFT or OTC mode, and at this stage a CPIN is generated, and at this stage a challan identification number is generated that gets credited to the electronic cash ledger of the DDO, or the DDO can see it. And here also, I also told you that after deducting TDS, the DDO has to file form GSTR 7 by the 10th of the following month in which the deduction was made. And I also told you that this option, it is good for the DDOs who make a large number of payments in a period of month. So this is all about the deduction of DDO, deduction of GST by DDOs. If you have any queries, you can mail me on my ID sajadwani657@gmail. I will try to help you. I'm not an expert in GST, but whatever I know, I will try to help you. You can follow me on Facebook, Sajadwani. You can follow me on Instagram, Dr. Sajadwani. So this is all about the deduction of GST by the DDOs working in the state of Jammu and Kashmir. Thank you so much for watching this video.